That's the most exciting thing for me, is the banks losing control over manipulation of the sound money market, both gold and silver. It shouldn't be that way. They shouldn't have control. This is God's money. This is sound money that bankers and central bankers and governments cannot inflate away. Silver has been breaking first like a double cup formation like I've never seen in any other asset. And it broke out of that. That's an awful lot of suppression. I mean, you're going back probably 100 years or so for that level of suppression. Silver, gold, physical is now rearing its head again and taking control of these markets. And I love that. It's about darn time.
For decades, gold and silver have existed inside a financial system that treats them not as money, but as instruments to be managed, capped, and controlled. Prices were not allowed to move freely, not because supply was abundant or demand was weak, but because the modern financial architecture depends on the illusion that fiat currency is stable and permanent. What we are witnessing now is not just a rally in precious metals, it is a visible crack in that control mechanism. Gold and silver occupy a unique position in the global system because they sit outside political authority. They cannot be printed, they cannot be conjured into existence with policy decisions, and they do not rely on confidence in a government's balance sheet. Historically, this is precisely why central banks and financial institutions have worked so hard to suppress their role. Sound money exposes unsound systems, and fiat systems only function as long as that exposure is delayed. Silver, in particular, has been the most distorted asset in the financial world. It has endured suppression not for years, but for generations, long enough that most investors have forgotten what honest price discovery even looks like. Yet silver is not just a monetary metal, it is an industrial necessity. It is consumed, used up, and removed permanently from circulation. When a finite, indispensable material is priced as if it were infinite, the resolution is never subtle. What makes this moment different is that the structure itself is beginning to fail. Technical breakouts matter here not because of chart patterns alone, but because they reflect something deeper. Physical metal is starting to assert dominance over paper promises. As you'll hear in this conversation, the brakes that held this market in place for decades are coming off. And when that happens, price is no longer governed by comfort or policy, but by reality itself.
It always works like this. When something is suppressed for a really long time and then you let the brakes off, then it shoots in a direction. So technically, silver's been suppressed for many years. But it really was the start last year. And I think we talked about this, where in the US, where it's primarily a paper market, and the paper market has been leading the globe in pricing. But it started to shift last January into a physical market when the US imported a whole bunch of physical silver and a whole bunch of physical gold. And then we had backwardation where the current prices for delivery were much higher than the future prices. Because why would that happen? Well, because people don't think they're going to be able to deliver in the future, because silver is a diminishing asset. It gets used up in manufacturing. And it seems like the transition it's not complete yet, not by any means. And I think that's when we're going to see the 4-digit number for silver. But what's really happening is the physical, we're in a transition where number one, affordability matters again. And number two, supply and demand is ultimately going to matter again. And we're already in that transition. So, plus it's really a reflex of what's happening in the debt markets, in the crypto markets, in all of the markets, that are so severely inflated and overvalued. And all of a sudden, people are looking at gold and silver. But to your point, silver is outperforming gold at the moment, because that's been even more suppressed, more volatile with the price action. And yet it's got full demand in every single sector of the markets. And you take a look at what's happening in the crypto. Is this a crypto winter? Is this the test? I don't know. I'm kind of surprised with the Wall Street and the government and the banks really pushing hard into that arena, why that area is doing so poorly. But there's only one place of demand for cryptocurrencies. That's it, one place. So if that demand dries up, this is my physical representation of a Bitcoin, which is designed to look like a gold coin. So you think that they're just the same. But I think that that's what's happening. A lot of what's happening is the system is simply broken. This is not something that just happened. But I would say that 2022 was a big year when they started shifting and having to push rates up. And we're looking at what's happening in the global bond market. So the response in the physical monetary system, sound money, which is gold as the primary currency and silver as the secondary currency, they're going into their day, and demand and supply is mattering again, as it should. I think it will carry over to other countries, but I also think that India has been very forward over the years in first their gold scheme and now their silver scheme. And part of that, I think, has to do with the pricing of gold. And silver is, even at these levels, certainly for many people, a whole lot more affordable. And so I think that the trend that they've been watching with their population also, because that is a tradition in India for people to wear their wealth. They've been through hyperinflation. They've been through currency denominations not all that long ago. What was that? 2018, I think, or 16, something like that, where they demonetized like 85% of their currency. And so this, to me, is an additional scheme to, number one, there's part of them that needs the public to be somewhat resilient. But whenever they're going to deposit it into the system and they're going to pay interest on it, it's because the government is attempting to gather it and make it easy to, I don't know, dare I say it, confiscate. You know, that is something that I've been looking at, quite a bit. And that is a phenomenon that is global, whether it's done in an overt way, okay, turn in your gold, you have no choice, or it's done in a covert way through these schemes. Either way.
Very interesting.
Oh, I'm telling you, either way, if you don't hold it, you don't own it. So if you deposit it in the bank, and they want to confiscate it, they're going to do it rather than go door to door. They've been working on this, primarily with gold, now with silver, but they've been working on this for a very long time. I know a big paper that came out was back in 2019, trying to entice the population to deposit their gold, which is money, and they know it's money. And silver now, it's a function of price, I think, as well.
Silver's recent behavior only makes sense when you view it as the release of long-contained pressure. For decades, its price was dictated not by availability or necessity, but by paper markets that manufactured supply through contracts rather than metal. That structure began to fail when physical demand started overwhelming financial abstraction, visible in backwardation, in record imports, and in silver's growing divergence from gold. Unlike assets that exist only as claims, silver is steadily consumed, removed from circulation, and required across every major industrial sector. When an asset is both monetary and industrial, both finite and indispensable, prolonged suppression doesn't end quietly. It ends with repricing. What looks volatile now is simply the market relearning what scarcity actually costs. But this shift goes beyond silver itself. What's unfolding is a broader return to physical reality across the entire monetary system. As debt markets strain, speculative assets falter, and confidence in financial intermediaries erodes, attention naturally moves toward assets that cannot be inflated or digitally replicated. This is where the conversation turns from price to control, from charts to ownership. Governments understand that physical metals represent independence from policy, which is why access, custody, and centralization suddenly matter again. The next phase of this transition isn't just about whether silver is scarce, but about who ultimately controls what remains, and that's the context Lynette moves into next.
Are we seeing a global awakening that you think will push true price discovery forward?
That is exactly the point. But the only way you're ever really going to have true price discovery if it really is on a true supply and demand market. And so, yes, that is part of this transition. And I don't know that governments are really keen on the public having the ability to maintain their wealth, but the public is just about the right size to help the government accumulate that wealth if it is held in an easy place for them to take. And what they'll do is they'll come out and they might make you, if they'll either do it overtly or they might even do it a little covertly by getting the public to think that this is what they would say, one-off thing, right? So in other words, it's only going to happen once and then you don't have to worry about it. So therefore you don't have to change your habit. But, India has not been really good at enticing their population into these schemes. I mean, some people have gone along, but yeah, I think silver is a critical mineral. It's used, and so is gold, but silver is used, well, they're both used in every single sector of the global economy, but silver more. And it gets used up in manufacturing. So, yep, I mean, there's only in physical form of anything. I don't care whether you're talking about lumber or oil or gold or silver or anything. In physical form, there is a finite amount. Even if they find another hoard that they didn't know about, there's still a finite amount. Unlike all of the contracts that have been driving all of this price action. So yeah, I mean, that's the most exciting thing for me is the banks losing control over manipulation of the sound money market, both gold and silver. It shouldn't be that way. They shouldn't have control. This is God's money. This is sound money that bankers and central bankers and governments cannot inflate away. Either one of them. And yes, I'm very happy to see the price action on silver, and gold just broke out of a triangle, I think yesterday. So a wedge. So I expect to see some really nice price action there. But yeah, technically silver has been breaking first like a double cup formation like I've never seen in any other asset. And it broke out of that. That's an awful lot of suppression. I mean, you're going back probably 100 years or so for that level of suppression. So it's not a surprise to me. And we've been talking about it. I think silver, gold, physical is now rearing its head again and taking control of these markets. And I love that. It's about darn time.
What are your thoughts there? Is there any scenario under which vaulting metals?
Well, I have a few thoughts on it. Number one, I would completely stay away from vaulting it in a bank. So if I were going to do vaulting, then it needs to be private. Some of it you need immediate access to, because you cannot skip over the turmoil that we haven't, we've begun to sort of enter this phase a little bit, but in the strategy that we execute at Zang Enterprises, it's a layered approach, right? So the very first part of it, which would include some cash, that's where you could also include some digital gold like Glint or what's the other one? Glint and Kinesis, right? One of those. And I only say those because they are redeemable. If I want my gold, there will be rules I have to follow. But if I want the gold that I have stored there, I can have it sent to me. Otherwise, I've got it on a credit card, like a MasterCard or something like that. And I can go to the grocery store and I can use it. So that is for the first really liquid part. And then, of course, you just have your raw metals of a variety of sizes. Those things I feel very, very strongly you need to have with you because you're going to need them like that when it happens. Having said that, there's other parts of the strategy or other layers where you might consider accumulating gold to hold your purchasing power so that you can convert it into income producing assets. If you're executing a strategy like that, then a private vault with it segregated in your name that they can't access without your key, I do feel comfortable in a safe vault. You need to vet everything. I question whether or not the places that are currently considered a safe harbor, to your point, like Switzerland and Singapore, this is really a global issue. And while I cannot guarantee that governments will and central bankers will come together in a synchronized way again, we certainly saw them do that after 2008. And with forward guidance but just a globally synchronized methodology. And I'm not going to lie, I have some concerns about that because desperate governments do desperate things. This isn't just something that's happening in the US. This is something that's happening all over the world. So it's almost like someplace like Serbia, where we were talking and they just rubber stamp everything. It goes in, it's hard to track everything. I would probably, honestly, if I could find, and I don't know of one yet, we've started doing our research on it. But if I could vet a really solid vault like we did in Panama, we found one in Panama that I would feel very comfortable with it, thanks to my friend Francis Hunt, right? That was a phenomenal experience. I would feel comfortable with something like that. But we're looking at another war, right? On top of what we already have going on when you're seeing Germany and Europe really hasn't built their army, but now they're looking to do that, which means they're anticipating deeper conflict. And I can't even sit here and say to you absolutely that there are sides in this conflict because so much of it is for visibility. We aren't going to know the truth of that until we know the truth of that. But I wouldn't guarantee that everybody's at the IMF except for a few countries. And they meet all the time and they talk quite regularly. And we already saw them be synchronized until they weren't anymore. I feel good about a really well vetted private vault. That I do. But I also feel like there is absolutely that first part of your portfolio that you can't put in a vault because you need it when you need it, just like that.
Silver's designation as a critical mineral simply formalizes what the market has been signaling for years. There is not enough physical supply to meet existing and future demand at suppressed prices. True price discovery cannot occur in a system dominated by paper claims. It only emerges when delivery matters, when contracts must be honored with physical reality rather than rolled forward indefinitely. Governments understand this dynamic very well. They also understand that widespread public ownership of sound money limits policy flexibility. Throughout history, periods of monetary stress have been accompanied by efforts, subtle or explicit, to centralize control over wealth. These efforts rarely announce themselves as permanent. They are framed as temporary, exceptional, or necessary, and they work precisely because most people do not adjust their behavior after the first occurrence. This is why storage strategy matters. Liquidity, accessibility, and sovereignty are not interchangeable. Metals held in banks are subject to banking rules. Metals held in private, segregated vaults offer greater protection, but even these must be carefully vetted, and none of them replace the necessity of holding a portion of wealth directly, without intermediaries, for moments when systems fail faster than policies can respond. What makes the current environment uniquely dangerous is its global nature. Fiscal stress, geopolitical tension, and monetary experimentation are not isolated to one country. Coordination among institutions has happened before, and it can happen again. Desperation has a way of dissolving boundaries when balance sheets break. Gold and silver are not speculative trades in this context. They are monetary instruments reasserting their role after decades of distortion. The real story is not how high prices may go, but why control is slipping, and why physical reality is beginning to override financial engineering. This is what happens when a system built on confidence collides with scarcity. And once that collision begins, it does not reverse quietly. If you want to understand where the financial system is structurally fragile and where it is not, this is the kind of conversation you need to be following closely. If this analysis helped clarify what's really driving gold and silver today, like and subscribe for more deep, system-level breakdowns, and share this with anyone still relying on paper explanations for physical realities. Thanks for watching and see you in the next one.